Let's talk about taking infinite banking leverage loans and paying yourself interest. You may be surprised to learn that these two things are completely separate. I will fully explain in just a few minutes. Aloha, I'm Stan Cox, Principal Broker and Strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy education organization. For the past several years, I have focused on and specialized in the infinite banking concept and developing the tax-free cash growth warehouse finance strategy. If you find this to be helpful, please like this video and subscribe to this channel. Also, please post your questions and comments here. Now, let's talk about taking leverage loans. First, what is a leverage loan? Well, leverage in its most basic meaning is to use a lever to achieve a specific desired result. So, a leverage loan is using the cash value in your infinite banking whole life policy, which is the lever here, as collateral for a loan that you are entitled to take against it per the provisions of your whole life contract. Now, let me break that down just a little bit more. Well, any whole life insurance policy, with the exception of those that are specifically for final expenses or burial expenses, will build cash value and allow the owner to take policy loans against that cash value as collateral. What I refer to as infinite banking whole life policies are specifically designed to generate cash value at the fastest possible rate and to be available for use of the infinite banking tax-free cash growth warehouse strategies as soon as possible. So when you have cash value available in your whole life policy, you can withdraw or surrender part or all of the cash value, or the preferred thing is you can leverage the cash value to take a loan against it as collateral. When you leverage the cash value to take a policy loan, your cash value, your money, remains in your policy and growing with the high compounding dividend interest that it is earning, even while you have that money leveraged as collateral for your loan. And that's actually the best, most amazing aspect of infinite banking, that along with the complete and total flexibility you have for the repayment options and the lowest interest rates, makes infinite banking and the tax-free cash growth warehouse the most powerful finance strategy in history. Now, let me just say here that not all insurance companies allow your cash value to grow unhindered while you have a policy loan balance. So that's also a part of the design aspect of an infinite banking tax-free cash growth warehouse policy. Choosing the right insurance company. Okay, so now we have our infinite banking policy with cash value available, and we want to take a leverage loan to finance something. How do we go about that? It is so easy to do. There are three ways or methods to take a policy leverage loan. The easiest way, simply call your agent or broker and tell them that you want to initiate a loan and have them do it for you. Tell them the amount you want and they'll get it going for you. The second method is just as easy, and this is what your agent or broker will do in your behalf if you call them and ask them to initiate the loan for you. Call the insurance company, customer service line, and ask for the loan in your behalf. This method is slightly more involved in that you'll need to navigate the phone menus and have your policy number available. And here's the typical process. You call the customer service line of the insurance company. You get the voice menu giving you options and telling you to press a number to get to the right representative. For my primary provider, that selection will be one. Then, because they'll ask, do you want information about life insurance, annuities, et cetera, et cetera. So the first option is one. Then the voice menu will ask you if you're a customer or an agent. Press the number 1 for customer. Then the voice menu will ask you your policy number. Or if you don't have it, press the pound key, which is what I always do because you're going to have to repeat it when you get to the live representative anyway. Finally, at that point, you get a live representative. Now, you tell them that you want to take a policy loan and for how much. They'll ask for your policy number and they'll verify your identity. They'll ask you how you want your funds delivered, either by check in the mail or by direct deposit into your bank account. If by mail, you'll then verify your mailing address. If by direct deposit, you'll give them your bank account information, including routing number and account number. They'll tell you it'll take between 7 and 10 days, but in my experience, it usually takes 4 or 5 days. With direct deposit, I've had my funds deposited in my account in as little as 3 days and no more than 5 days. The only time I used the mail to receive my money, it took 5 days. They process the loans quickly and you get your money in just a few days. The third method is to initiate your policy leverage loan through your personal web portal. When you get your account, you will be able to establish your own personal web portal to all the information on your account. The start date, the face value, the cash value. If you have outstanding loan balances, all the riders you have on your policy, premium due date, everything about your policy, you can find it on your personal web portal page. Also, you can make payments, premium payments, initiate policy loans, and make loan payments as well, right there on your personal portal page. Since I made a video where I show you step-by-step how to initiate a policy loan through your personal portal page in a previous video, I won't go through it here, but it is very easy to do. And you can see that video by searching this channel for the video titled IBC Financing Your First Time Using Infinite Banking. Now, let's address the idea of paying yourself interest on your policy loans. That is the way all the other people promoting infinite banking refer to it, including the Nash Institute, which coined the phrase infinite banking, which to me is irritating because, in fact, you don't pay yourself any interest on loans you take ever. It's not a thing. What Nelson Nash and everyone else refers to when they say you want to pay yourself interest on the loans you take is the paying of premiums for the paid up additions rider that you want included as part of the design of your policy. The main reason you want that rider on your policy is because most of the premium you pay for it goes directly into your cash value right away. You can think of it in terms of paying yourself interest, but that is not what is going on. And I prefer to be completely truthful. I hate deceptive tactics. You see, the loans you take use the cash value of your policy as collateral for the loan, hence leverage loans. But the loans aren't funded with your money. Your money remains in your policy cash value. The loans are funded by the insurance company out of their general fund account, which they use for investing. You see, policy loans are like real estate or bonds to the insurance company, something they invest in that produces gains for them as part of their investment portfolio. By the insurance company making smart investments, they make a profit. From the profitability of their investments, they pay the guaranteed interest and dividends to your cash value. So in a very roundabout way, you do, in a sense, contribute to the interest and dividends that are paid to your cash value, but you certainly do not pay yourself interest on your loans in any kind of a direct way at all. The insurance company funds your policy loans, and they charge interest on those loans. So they do make a profit from the loans. And if you die while having a balance on policy loans, the insurance company deducts what is owed on the loans plus interest from the death benefit that they pay out to your beneficiaries. And that's why the insurance company really doesn't care if you repay the loans or not. As long as you pay the interest on the loans, they're good. And even though they are paying you more in interest and dividends than you pay them in interest on your policy loans, and you're getting free loans and making money from the dividend interest they pay you, they still make a profit from the loans. So you pay interest to your cash value simply by paying the premiums for the cash-rich riders that are part of the design of your policy. The paid-up additions rider is one of those riders. And about 90% of the premium you pay for that goes directly into your cash value. And the more cash value you have, the more and faster it grows because of the compounding dividend interest it earns. So you can add to your cash value and, as a result, increase the magnitude and speed at which it grows by means of the compounding dividend interest. But you do not pay yourself interest on your policy loans. I really hope this clears up the misinformation about paying yourself interest on policy loans. And I hope the step-by-step directions for taking policy leverage loans here has given you confidence in how easy and simple it is to take advantage of and put into practice this fantastic infinite banking tax-free cash growth warehouse finance strategy. If you found this to be helpful, please like this video and subscribe to this channel. Also, please post your questions and comments here. You have questions, we have answers. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. If you'd like to book a free phone consultation with me, the link to my Calendly page is also below. If you'd like to apply to become a client of ours, the link to the application is below. We're here to help, and we look forward to helping you. Aloha and mahalo for watching.